Toll free 877-881-0271. Now here's your host, Jason Bible.
Welcome to the show. Welcome to the show. Should be live on Facebook. Howdy, folks. Jason Bible, Right Path Real Estate. Looks like my system here is having a little case of the Mondays. So, welcome to the show. If you want to give me a call, 713-785-1817. We're here to talk about real estate and investing. Talk a little about economics and politics. It's getting towards the end of the year. You know, we're the first Monday after Thanksgiving. This is when real estate, for people who are not real estate professionals, slows down. It really does. This time of year, the market really slows down for people who are not in the business of real estate. What do I mean? It amazes me how many people this time of year take the next 6 weeks off. It's got to be like 50% between now and the first full week of January. And I'll tell you this, we buy an obscene amount of houses between now and the first week of January. In fact, every year, it's our new peak. Like, this is when we buy a ton of houses, an absolute ton of them. That last week between Christmas and New Year's, we'll buy 4 or 5 houses in a week. I mean, we will buy a ton of houses in those because no one's working. It's the strangest thing. There's all this, everybody will spend out all this marketing, they'll send out all these offers, and then they just won't do anything until January. I'm not sure how that works in everybody else's business, but between now and the end of the year is over 1/12 of your business. So probably be a good idea if you keep sending out your marketing, keep doing your deals, keep looking at properties. Now is a great time to invest. All right, folks, I got 3 things I want to talk about today, and I don't know if I'm going to have time to get to all of them. Tom and I have been joking for a while now. Our show is only an hour. And if you look at some of the nationally syndicated shows, you know, Rush Limbaugh and some of those other guys, they are 3-hour shows. I don't know if we could do a 3-hour show. That'd be pretty long. But we've got 3 things we want to get to today. I don't know if we're going to be able to get through all of them. First thing is the HAR report. This came out, I think, a week or 2 ago. It basically is the summary of all the real estate activities that took place in October. I'm going to talk a little bit about that and the implications and some of the predictions we had made at the beginning of the year that are starting to come to fruition here at the end of the year. Tom and I have been invited to a number of panels and other group meetings throughout January and February to predict what's going to happen in 2017. And it's amazing how much of this stuff that we talk about ends up coming true. So we're going to talk a little bit about that and how it relates to the HAR report. We're going to talk about taxes. And I'm going to talk about taxes in a kind of a global sense, in a who pays taxes, who doesn't, what are the implications on your portfolio. And then I'm going to talk a little bit about Trump's real estate holdings and how it relates to the presidency. This was a hot topic this weekend. On Sunday, I watch a couple of the political talk shows, and it just goes to show that these folks really have no idea how business and real estate actually works. It's been amazing to me in the last few years how many folks are in business, work in a business, work at a high level in a business, and don't understand the fundamentals of business. It's not because these people are stupid, because that's not the play, and that's certainly not the case. But they don't think of it in a larger context. Most of y'all who work for somebody else are typically focused on your job and how that interacts with the other players and the other teams in your company. And a lot of times you don't have the opportunity to step back and say, okay, what is the greater implication of what I'm doing in this business and how it impacts the business and the market? And to be quite honest with you, some of y'all works for some really large companies. I know I'd always did. And so aside from some financial impacts, which were really on the margin, you really didn't see huge swings of revenue or growth just based on the one thing you're doing. And part of that has to do with the fact that we do business in teams in this country. So in any case, we're going to talk a little about the HAR report. We're going to talk about taxes, and we'll talk about Trump. So let me get to the HAR report. how you find this is it's titled the MLS press release. This is just for Houston or the greater Houston market, which according to, I'm just reading the top of the Har report, encompasses about 32,000 realtors. So we have 32,000 real estate agents and brokers here in the greater Houston market. That's bigger than some people's market. Just the number of realtors is some markets have more or less houses than we do realtors in our market. So it's pretty amazing how big the greater Houston market is. So let's go through here. This is for October 2016. So I'll read a couple of the notes here. Despite continued strains within the energy industry and jitters surrounding the outcome of the presidential election, the Houston housing market held steady for the second straight month. I want to give you guys a little insight on what's going on in the energy industry. Talked to a lot of people the last 30 days. A lot of folks that are in different levels of management in energy, different energy businesses, upstream, midstream, downstream, all that kind of stuff, servicing companies, all those sorts of things. And there seems to be, on the upstream side, there seems to be a consensus that things are starting to improve. In fact, I'll tell you, this is one question I always ask. It'll give you everything you need to know about the health of a large organization, and that is travel. One of the first things that gets cut in any big organization is there's a moratorium on travel. And I've worked for large organizations before and seen it, and this is typically how it starts. Markets start to get tight, margins get a little bit thinner, budgets start to get a little bit thinner, and they say, hey guys, no more travel unless it's absolutely business necessary. Which, of course, then I ask, well, what are these guys taking vacation, or what are they doing all this traveling for? But in any case, you'll see that travel in some of these large organizations will then have to be approved by somebody at the executive level, or the vice president level, a director level, to ensure that they're not wasting any money on needless travel expenses. Now, that's when things are starting to tighten up. You got to tighten your belt. We're going to do a lot less traveling. What happens when things are starting to expand, or they're anticipating expansion, the travel budgets open up a little bit more. And we've got some friends of ours that are starting to spend a whole lot of time on the road, and they work for oil and gas companies, and that's an early prediction that things are starting to open up a little bit. And let me put it this way. The folks that do this stuff full-time as a profession are in the belief that things are about to get better in the energy markets. Now, take that for whatever it's worth. I'm not a stock guy. I don't follow what's going on in individual companies. You can listen to other radio programs on this station. But the consensus I'm getting from all the folks I've been talking to the last 30, 45 days is that the oil and in particular, in the energy industry, in particular, the oil sector is starting to get a lot better. So in any case, that's what's coming down the pipe. So I wouldn't worry too much about any of the oil and gas stuff. I think they're through it. If you talk to some folks who've been doing this 30, 40 years, they'll tell you, I mean, this happens every 5 to 8 years. Get a little dip, and then we come back. One of the things I've been saying at a number of our events for the last 18 months is, hey guys, enjoy low gas prices now, because give it 24 months, we're going to be whining and complaining about $200 barrel oil. It's just, that's how these markets work. So, and that has a huge impact on Houston. It does. It has a great positive impact on Houston. So let's get back to the Har report here. Home sales in October were statistically unchanged from 2015. So the way the Har report works is they'll look at yearly trends, but a lot of times they look at the current month, which this report was from October, and then they'll look at the October report from 2015. And then that'll give you some idea of what they're trying to do is essentially normalize the data.
2 minutes.
So, all right, according to the last monthly report prepared by Houston Association of Realtors, about 5,900 homes sold in October. Last year, about 5,900 homes. And supply grew to about 3.8 months. National average is 4.5. If you've got your house priced right, you could certainly sell it relatively quickly in this particular market. Single-family home median price rose 6.3% to $218,000. I want to say this again because this is really important. The median home price, the price at which 50% of the houses sold below, and the price in which 50% of the houses sold above, was $218,000. $218,000. That is insane. What that tells me is $218,000. There's not a whole lot of rental properties in and around that price point.
1 minute.
So for those of you who are landlords, you're starting to get priced out of the Houston market. For decades, there was relatively inexpensive houses where you could get decent. Heck, you could go in and buy a property all cash and get a 10% yield on it. You could buy a house for you could probably buy it for $80,000, $90,000, and it rents for $1,100, $1,200 a month on MLS. The reality is those are not as plentiful as they used to be, simply because the market has appreciated so much. We get back from the break. We're going to talk more about the HAR report. I'm hoping we'll get to talk to a little bit about taxes and Trump's assets. This is Jason Bible, Right Path Real Estate. We'll see you at the other side of the break.
Mic's off.
Rehab loans, conventional loans, FHA, and no-income documentation loans can seem scary unless you have the right mortgage company to guide you through the process. Since 2003, Noble Mortgage has been helping investors just like you. Whether rehabbing houses, buying your first home, rental, or commercial property, Noble Mortgage offers up to 100% financing. Call Noble Mortgage at 713-680-8100 or visit noblemoney.com. That's noblemoney.com.
NMLS 292143, 8203 Willow Place Drive, Houston, Texas, 77070.
Are you expecting to close accurately, on time, and with lots of communication on your home purchase? You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer with Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people and culture before results. Our company concentrates on building those teams who operate with structure, process, and recognition for going the extra mile for you. This way, we have the energy to make this your best home purchase ever. Give us a call today to find out the simple steps to get started.
That's good.
I'm Jennifer Hernandez, the Hernandez team at Legacy Mutual Mortgage.
I don't know what it is. I don't drink much coffee
Jennifer.legacymutual.com
on vacation.
or call 713-579-3611. Again, jennifer.legacymutual.com. We can't wait to consult with you soon. NMLS
yeah, Matt, that's interesting. You're right down in the middle of it, too. Because you've got upstream and you've got those downstream.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties, whether it's a
now, how many of y'all are listening to this as opposed to watching it because you're refreshing to see what Cyber Monday deals are out there?
Over the last 5 years, Fast Track has completed over 500 projects, which has helped us create our 3 keys to success. Use a detailed scope of work so that everything gets done, train and maintain quality crews so it gets done right, and complete the work in a proper order so it gets done fast.
No more managing it yourself, no more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992. Again, that's 832-742-9992 or on the web at fasttrackremodeling.com.
Get ready, get set. Game-changing radio is here. Business Newsmakers Radio with me, Lou Guarino. Every show, we bring you the hottest business newsmakers from all over the globe. Our newsmakers share their views on what made them so successful and how you can benefit from their expertise. I don't use fluffy fillers or word salads. No way, man. I hit them hard with questions that will give you something powerful to make a difference in your business today. The secrets of success are with me, Lou Guarino, right here on Business Newsmakers Radio.
Join Lou Guarino for Business Newsmakers Radio Mondays at 3 on Business 1110 KTEK.
The Realty Investment Club of Houston has taught
right,
more
1
real
minute.
estate investors than any other program in the state. Come check us out at richradio.org. If you're considering learning how to invest in real estate, then richradio.org is the quickest way to learn how to make money in the Houston market. We're not just another guru-driven club. We're a community of Houston's most successful real estate investors. Join our community to learn what it takes to make money in Houston. Visit richradio.org. That's R-I-C-H, radio.org.
It's estimated that 9 out of 10 individual investors fight a losing battle against the big institutions. So what can you do about it? Hi, I'm Mary Beth Motisi, owner of Online Trading Academy here in Houston. Listen to Power Trading Hour to learn how the markets really work and how to think and act
15
like the
seconds.
professionals.
Okay.
Call us at 281-820-8905 to register for our complimentary half-day class. Find out more at HoustonOTA.com and listen to Power Trading Hour, weekdays at 2 p.m. on Business 1110 KTEK.
All right,
This is
hot
Business
mics in
1110.
5, 4, 3, 2, 1.
Welcome back. Jason Bible, Right Path Real Estate. If you want to call the show, 713-785-1817. You can also watch us live on Facebook. And there's a live stream on 1110 KTEK. All right, so looking over the Houston housing report here, got a note from somebody on Facebook. Said, hey, Jason, I live down here in South Texas. We're already seeing a number of drilling operations get green-lighted and people are getting hired. So that's a very early indication that energy market is beginning to recover, albeit slowly. But I'll tell you what happens, just like we've seen in times past, as the market declines and then begins to increase in value again. In other words, where it begins to make sense, where drillers start drilling and people start making more products, the hiring goes from a trickle to a full watershed event. You'll just start to see a whole bunch of folks start getting hired. There'll be this big. I'll tell you what was wild. I had so many colleagues of mine, friends of mine, that would go out and would get hired by a company, and then they would get just absolutely headhunted like you wouldn't believe. Headhunters calling, recruiters calling, friends calling. Hey man, we need more people like you in our company, and they're getting poached from other places. I mean, it's just when the energy sector gets hot down here, it gets real hot. So in any case, let's go back to the HAR report. We're talking about October, and looks like here total dollar volume for properties sold in October rose 1.4% to $1.9 billion. This was a great number for me. We buy in Houston, the greater Houston market, $2 billion in residential real estate a month. $2 billion in sales in a month. That's incredible when you think about it. Let's see, here's some other notes from the report. Month-end sales for single-family totaled about 6,600, an increase of 16%. So what does that mean? We have an increase in pending sales, but our total sales are flat. Could mean that it's taken longer to close these deals. That would be my guess, for it to be up 16%. What's interesting is total listings are up 9%. So we've got an increase in listings at 9%, and then we've got an increase in total pending sales at 16%. So fascinating numbers there. Ultimately, it means that as the inventory comes available, it's pending, but it's also taking a little bit longer. And it looks like it's taking about 55 days on market to sell a house. Now, does that mean if I put my house on the market today, it sells in 55 days? No. What that means is days on market means it takes about 55 days until you get a contract on it. And then from there, it'll take another 30 to 60 days to close. That's assuming it doesn't fall out of contract. In other words, there's not an issue with during the option period. There's not an issue with the financing. It's not uncommon to have a property fall out of contract 2 or 3 times. So you can add another somewhere between 45 days for every contract that falls out. So you can add another 120 days onto this process. It could still take you 6 months to sell your house. So you do really need to scrutinize some of these numbers and know exactly what they mean. So in any case, let's see. Median price rose 6% to an all-time high of 218,000. That's absolutely insane. The average price is about 278,000. So when we get into a group and talk about the economics of real estate in Houston, and when I wear my Houston House Buyer shirt, inevitably, and anybody looks at my shirt and they go, "Oh, so you're in real estate, huh?" Yep, that's what the shirt says. And they'll ask, "Well, how's real estate? Well, how's the market?" I mean, what do you mean by how's the market? I mean, is it a good market? Is it a bad market? That's kind of like saying in the capital markets, how are capital markets? How are they? I mean, how's the market doing? And you go, well, I don't know. I mean, there's equities, there's bonds, there's foreign exchange markets. What's the dollar doing against the euro? I mean, that's a question that then you can form some kind of answer around. But just saying, hey, what's going on in the market doesn't really mean anything. So for us in the real estate market, in single family, what I like to talk about are what are those different price points. So in other words, you've got the houses between $1 and $80,000. You got the houses between 80 and 150, 150 and 250, 250 to 500, and 500 and above. I like to say 500 to about 750 and 750 to $1 million, and then the houses above $1 million are kind of in their own little market all to themselves, all the way up to $10 or $15 million. But I like to look at these things kind of like looking at if you're driving through parts of South Texas or Central Texas, and you drive through, let's say, a little hill, and they'll go in and they'll dynamite or blast through, a hill, and so you've got a road that goes in between two little hills, and you can see like sandstone. You can see the striations there in the rock, kind of like looking at rings in a tree. And that's really what you're looking at in real estate. When someone says, "Hey, how's the market going?" I'm like, I mean, it's always good. There's always things that are selling quickly, and there's things that are selling slowly, and whether or not that's good or bad depends on where you're at in your business cycle. But it really depends. So it's kind of nice when you break those things out. I mean, if you look at houses below $150,000, and this is where numbers can really trip you up if you don't understand the underlying analysis. It's fascinating, and I'm sure some of y'all are experiencing this when you go on Facebook and you look at all the political posts that are going on right now. And you'll get people that are calling each other morons and idiots, and you don't know what you're talking about. And here's this article that clearly says this. A lot of times people do not understand the difference between data, analyzing data, and understanding the underlying limitations and assumptions when collecting that data. And people may see one thing, but reality is quite different. And I'm going to give you a set of numbers right now that's going to tell you that. Houses sold between $1 and $80,000 have decreased 25% since October of 2015. Houses priced between $80,000 and $150,000 have decreased 23.7%. So let's put those two price brackets together. Between $1 and $150,000, they've decreased 25%. Now, if I were to write you a New York Times article on this, I would say something to the effect of, prior to the election, the single-family housing market in Houston has fallen 25% for those houses below $150,000. And the first-time home buyer is unable to buy a house. And you can add all this drama around. I mean, think about that. $150,000 to $1. That's the first-time home buyer market. That market has absolutely collapsed. I mean, you can get it on Fox News or CNN, and you get all the animation, and oh my gosh, there's a housing crisis below $150,000. And that's not what's going on. Let's go back to one of the first numbers I shared with y'all. The median home price rose 6%. The median home price in Houston is $218,000. What's really going on here? Houses have appreciated so much in the city of Houston that there are very few houses that are priced below $150,000. In fact, those houses a year ago that were selling for $150,000 are now selling for $165,000. So when you look at this initial HAR report, you go, oh my gosh, the housing market below 150 grand has collapsed 25%. And you could see where this goes. I mean, this is a very simple analysis. Now, if you take this to another level, and this is more of a discussion on politics, if you take this to another level, you can see how you can take, consumer price index numbers or jobs numbers or any other number that you get that's somewhat complicated that most Americans don't deal with on a daily basis, and use some of this language like it's decreased 25%. Yeah, you know why the houses below 150 grand, why those sales have decreased 25%? Because there aren't any houses that are worth less than $150,000.
2 minutes.
Does that make sense? Those houses have appreciated so much, they're now in an entirely different bracket. They're not worth 150 grand anymore. They're worth 165. In fact, if we go into another bracket, the houses that are priced below $80,000, those have decreased 25%. Well, what happened? Those houses that were worth 80 grand last year are worth 110. So we've taken them out of the $80,000 bucket and now put them into a completely different bucket. So when you move from one bucket to another, what happens? The bucket they were in decreases, but then the bucket they go into increases. So here's where they went. So everything below $150,000 in sales, those sales decreased by 25% because those houses have appreciated. Well, where did they go? Well, let's look at the $150,000 to $250,000 bracket. Sales in that bracket has increased 12%.
1 minute.
Meaning they have appreciated from $125,000, $135,000 to $150,000, $160,000, $165,000 in a year. In a year. So for those of you that are looking for rental properties that cash flow with some debt or give you a yield when you're in all cash above 10%, you're having a really hard time finding houses because these things are rapidly appreciating. The average home price in Houston is $278,000. Let's just round up. 280 grand is the average sales price. When we get back, we're going to talk a little bit more about what the impact of this is on buy and hold investors, wholesalers, and flippers, what this means for your real estate portfolio. We might talk about taxes and Trump's assets when we get back. This is Jason Bible, Right Path Real Estate.
Mic's off.
Did you know that there are over $24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRAs. To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
Are you expecting to close accurately, on time, and with lots of communication on your home purchase? You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer with Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people and culture before results. Our company concentrates on building those teams who operate with structure, process, and recognition for going the extra mile for you. This way, we have the energy to make this your best home purchase ever. Give us a call today to find out the simple steps to get started. I'm Jennifer Hernandez, the Hernandez team at Legacy Mutual Mortgage. Jennifer.legacymutual.com or call 713-579-3611. Again, Jennifer.legacymutual.com. We can't wait to consult with you soon. NMLS 54497.
Equal Housing Opportunity Lender. NMLS 514497.
The Realty Investment Club of Houston has taught more real estate investors than any other program in the state. Come check us out at richradio.org. If you're considering learning how to invest in real estate, then richradio.org is the quickest way to learn how to make money in the Houston market. We're not just another guru-driven club. We're a community of Houston's most successful real estate investors. Join our community to learn what it takes to make money in Houston. Visit richradio.org. That's R-I-C-H, radio.org.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties, whether it's a flip, rehab, or a rental rehab. No more managing it yourself. No more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992.
It's long, over 1,000 chapters, over 30,000 verses. No wonder so many of us have never read it cover to cover. Want to do it? Want to read the entire Bible? Start today at BibleStudyTools.com. BibleStudyTools.com includes Bible in a Year, an interactive plan for reading, learning, and understanding the Bible. Deepen your faith and impact your walk with God, one day at a time. Bible in a Year, just one of the new interactive Bible study tools at BibleStudyTools.com.
The following update is for drivers who pay too much for car insurance due to DUIs, DWIs, tickets, or anything else. Our company specializes in low-cost SR22 auto insurance. We know that mistakes happen and offer free quotes for very affordable auto insurance meant specifically for you, the overpaying high-risk driver. The quote is free, and we'll handle the filing so you can start saving money. Call 800-749-2984. 800-749-2984. 800-749-2984.
Hot mics in 5, 4, 3, 2, 1.
Welcome back. Welcome back. Jason Bible, Right Path Real Estate. If you want to give me a call, 713-785-1817. We're talking about the HAR report for those of you who are outside of Houston. That's our market report, kind of what's going on in the greater Houston market. We're also on Facebook, Right Path Real Estate. You can see me here on Facebook Live. We're going to talk a little bit about taxes, if I can get to it, and Trump's assets. Might save taxes for Wednesday's show, or the Trump stuff. I find it... The idea this guy has to liquidate all of his real estate assets is patently absurd. I'll just start with that. But we'll get into that at a later show. It doesn't make any sense at all. Anyway, so let's go back to the HAR report here. Average home price climbed to $280,000. Median home price in Houston now is $220K. What does that mean? If you are a landlord, it is getting really hard to buy houses that make sense from a return standpoint. Are they out there? Absolutely. But you got to think a couple years ago, the median home price was like $140,000, which is about the upper end on the rental spectrum that you'd want to be. Now, if you want single-digit returns, and there's nothing wrong with that, then it's okay if you buy a house for $200,000 and it rents for $1,800 a month. I mean, you can do that. It's not a big deal. I've said this before on the radio show. My wife and I have a rule. Whenever we move into a new neighborhood, we rent first to make sure we like the neighborhood, and then we buy a house. And we're renting a house right now that is probably worth somewhere between $300,000 and $325,000, and we're renting that for $1,850 a month. It cash flows if you paid cash for it, and I believe I'm pretty sure our landlord did. It doesn't work if you've got leverage on it. So the higher the price point, the disproportionate amount of rent you will get. In fact, they're inversely proportional. Tom and I have joked, if we ever decide to go out and move into a higher end area of town, let's say $1 million, $2 million house, we just rent one. I mean, if rent is $5,000 a month on $1 million house, why would you buy it? It costs you, I mean, the taxes alone are probably $3,000 a month. So it really doesn't make any sense on these higher end properties to own them. Now, where it makes sense and where people get kind of caught in the trap of it always makes sense to buy a house versus renting is when you get into the houses below $150,000. In that case, it makes a lot of sense to buy them. But as houses begin to increase in price, typically their rents decrease. So for those of y'all who just take a look, let's say you live in a $500,000 house, look and see how much houses are renting for in your neighborhood. Now I'll tell you this, you're not getting any, quote, equity, but I'll tell you from the monthly expense standpoint, it makes a lot of sense to rent instead of own. In any case, let's go back to the HART report. So houses below $150,000 have decreased 25%. Houses between $150,000 and $250,000 increased 12%. Houses between $250,000 and $500,000 increased 9.5%. Here's where things get interesting. About 2 years ago, Tom and I said houses above $250,000 are going to start to experience some losses. They're going to start to decrease in price, decrease in value. And that absolutely happened. In fact, it happened last year. I can almost tell you the date it happened. It happened the last 2 weeks of September and the first 2 weeks of October. 6 months prior to that, we liquidated everything above that we had above $250,000, and we wholesaled everything above $250K because we could see that slowdown coming. And unfortunately, there are some investors that we would meet at networking events that would tell us we're all full of nonsense or BS and are still sitting on houses today, a year later, and have not sold them. So what's happened? In the last year, those prices have adjusted to the new market. And in fact, if you look at this HART report, it tells us that is exactly what happened. Between October 2015 and October 2016, prices or number of sales in those markets increased 9.5%. The question is why? The reason is the last 2 weeks of September 2015 and the first 2 weeks of October 2015 were when the market in these higher end homes, I should say higher end, they're not really higher end, above the median home price between $250,000 and $500,000 completely slowed down. In fact, in some markets, it stopped. There weren't any sales in some of those markets for almost 6 months in certain submarkets. So what's happening now? Prices have adjusted and they're starting to sell again. Buyers have come back. When you look at days on market, when you look at months of inventory, those are average numbers. You have to scrutinize what's going on in that submarket. We looked at a market in 2015 that was that summer that was appreciating $25,000 to $50,000 a quarter. That doesn't happen in flyover country very often. That's the kind of nonsense you see in California, not in Texas. So when we saw that, I will never forget this meeting. We're sitting there in our sales meeting with our sales team and the whole company. And I said, "Hey guys, we got this house in this market. What should we do?" Well, we could flip it, and by the time we finish the rehab, it's probably going to be worth another 25 or 50 grand. And I said, "Well, playing devil's advocate, it could also be worth 25 or 50 grand less after our rehab." We decided to wholesale that property. We made a great return on it. That property then went through a rehab, and it sat on the market. In fact, there weren't any sales in that submarket for nearly 6 months. I don't know if that person has sold that house yet. It'll be interesting to see if they did. But in any case, so what's happened? The houses between $250,000 and $500,000, buyers are starting to enter those markets again. In fact, what we're starting to do in Houston house buyers is we're starting to see what the economists like to call green shoots in markets priced between $250,000 and $500,000. In fact, I'm starting to see some green shoots all the way up to houses priced at about $800 grand. Now, I'll tell you this. If you're a new real estate investor, you're a new flipper, you're a new wholesaler, you're a new landlord, and you're listening to this radio show right now, and you're a new investor, I would not take this advice, because if you goof one of these things up, it gets really expensive really fast. You know, on a $700,000 house, a 10% price correction is $70,000. 70 grand. I get a lot of new investors that want to flip a house at, let's say, $700,000. And they go, well, Jason, I could make $100,000 flipping that house. Oh, 100 grand, huh? A 10% price correction is 70 grand. Your closing costs are almost $70,000. Trust me, 100 grand on a $700,000 house is nothing. Those margins are way too thin. And I'll tell you what, I see a lot of investors in Texas and in Houston in particular are finally starting to get their butt kicked. And I'm going to see some investors in California that are about to get their butt kicked because they think that selling a house for $1 million and making $100,000 is how this business works. And that's really and truly, you're going out of business slowly. A 10% margin in real estate is way too tight. Way too tight. It works really well when markets are appreciating, but when markets stop appreciating or they just slow down, those people go bankrupt overnight. It is amazing to me. We were doing the Private Lender Summit that Brant Phillips and I do every quarter. And it's a really small gathering. I think there were probably, 50, 60 people in the room. We've had as many as 200 plus that have heard us heard Brant and I talk about how to lend your money in real estate. So these are people who have got some money in 401k, they've got some money, let's say, over at Quest, and they want to lend to real estate investors to buy and fix up houses.
2 minutes.
One of the things we realized a couple years ago is no one trains these people on how to lend their money. So Brant and I have started teaching people, hey, this is not the only way to do it, but between he and I, we've done a couple hundred houses. So, hey, this is how we think it works best. And oh, by the way, talk to your CPA and attorney. But one of the things that's been absolutely fascinating is how thin some of these margins people are willing to accept. And what they don't realize is that when there's a change in the market, the losses are enormous. When you're below about $200,000, the worst thing that happens is you have to rent the house out. That really is the worst thing that happens. And truthfully, you'll make more money in the long run if you rent it out anyway, instead of flipping it or wholesaling it. I mean, the real money that is made in this business are those that are renting out real estate. Yeah, we're doing a lot of flipping and wholesaling just because that's where the market's at right now. But sometime in 2017, we're going to switch over to a buy and hold company. And we're just going to buy and hold as much real estate as we can get a hold of because we think there's going to be some changes in those markets pretty soon. All right, folks. So I've reached the end of this segment. This is Jason Bible, Right Path Real Estate. I have probably beat this poor HAR report to death. We get back, I'm going to talk a little bit about taxes. I'm going to have to be brief because it's going to be a short segment. This is Jason Bible, Right Path Real Estate.
Mic's off.
Did you know that there are over $24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas.
It's so funny. I saw Anne-Marie last weekend.
We offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more.
Come back on the radio show. You're the voice of Quest IRA.
Their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRAs. To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com. Investor loans offering up to 100% financing are still available. You just have to know where to look. Look no further than Noble Mortgage. Noble Mortgage is a full-service mortgage company that's been helping investors since 2003. Noble Mortgage offers up to 100% financing to investors that covers purchase, repairs, and closing costs. In addition to private money, Noble Mortgage offers conventional loans, FHA, and even no-income documentation loans for both residential and commercial properties. Call and ask about our 5-point guarantee, which includes free pre-qualifications within 2 business days. Call 713-680-8100 or visit noblemoney.com. That's noblemoney.com. Our team has over 50 years experience in the mortgage industry. Call us today, 713-680-8100, or visit us on the web, noblemoney.com, noblemoney.com.
NMLS 292143, 8203 Willow Place Drive, Houston, Texas, 77070.
Join a group of hardworking investors willing to share their knowledge and experience with others. We're not just another guru-driven club. We're a community of Houston's most successful real estate investors. Discover more at richradio.org. The Realty Investment Club of Houston, the Rich Club, has taught more real estate investors than any other program in the state. Join the Rich Club and become part of the most informed community in Houston. Quickly discover your investment options. Receive the information you need to get started. Learn what it takes to avoid the pitfalls of real estate investment. You have questions? We have answers. If you're considering investments in Houston's real estate, then richradio.org is the quickest way to join the community and learn how to make money in today's market. Learn more about the education and community at richradio.org. Join our community to learn what it takes to make money in Houston. Visit richradio.org. That's RICH radio.org.
It's estimated that 9 out of 10 individual investors fight a losing battle against the big institutions. So what can you do about it? Hi, I'm Mary Beth Motisi, owner of Online Trading Academy here in Houston. Listen to Power Trading Hour to learn how the markets really work and how to think and act like the professionals. Call us at 281-820-8905 to register for our complimentary half-day class. Find out more at HoustonOTA.com and listen to Power Trading Hour, weekdays at 2 p.m. on Business 1110 KTEK.
Did you know that
30 seconds.
63% of homes contain allergens from cockroaches? And that mice spread potent asthma triggers found in 82% of homes? It's true. Common household pests are major offenders on the list of indoor allergens. Learn what you can do to help your family breathe easier. Visit pestworld.org. A public service message from the National Pest Management Association and the Asthma and Allergy Foundation of America.
All right, stand by.
This is
Hot
Business
mics in
1110.
5, 4, 3, 2, 1.
Welcome back. Jason Bible, Right Path Real Estate. 713-785-1817. I hope you guys aren't Cyber Monday shopping. You ought to be shopping for real estate. There's so much better deals. Although I say that and I'm doing it right now. So I'm a bit of a hypocrite. All right, let's talk about taxes. Great article on Zero Hedge. This is probably one of my favorite websites. And one of the things that makes it so much fun is they just got listed as one of the, quote, fake news sites, according to, like, the Washington Post or one of these other places, which is so incredibly stupid. It's not even funny. These guys started in, like, 2008, 2009. And a lot of the stuff they get, a lot of what Zero Hedge does is really in economics and finance. And so, it's, hey, this is what's really going on at Amazon, or hey, in fact, one of my favorite articles they did recently is when Donald Trump filed his FEC financial disclosure, and they went through and dug through the things. So there's some really neat folks that dig through some things on Zero Hedge. It's a great article. The comment section gets kind of wild, but I think principally because they don't delete anything, so they get all kinds of crazy folks that show up in there. But great article in there, and the article is entitled "Who Pays What Taxes in the U.S.?" So it's on Zero Hedge, ZeroHedge, Zero Hedge. Who pays what taxes in the U.S.? This is incredibly instructive. It is a great resource to read through because it's a real reminder on who pays what taxes. Now, this is in particular federal income taxes. They talk a little bit about payroll taxes And the article is pretty lengthy. But I want to share with you just some basic numbers. They start their first paragraph out, hey, there's always discussion about taxes around election season. But the discussion always centers around, quote, the rich. So I'll start this paragraph off. Why the particular focus on the rich? The answer is simple. While those Americans who declare $500,000 or more in income represent less than 1% of the total tax returns, meaning they make $500,000 or more, they're greater than the 1%. They account for a quarter of taxable income. More importantly, they're responsible for 37% of government revenues collected through individual income taxes. If you make $500,000 or more, you are a part of a group that is less than 1% of the total number of tax returns.
2 minutes.
Your income represents 25% of the total taxable income available to be taxed by the federal government. And if you fall into this bracket, you pay 37% of government revenues. You guys want to talk about fairness. The top 1% nearly pays 40% of all of individual income taxes. The top 1%. We're talking about a few 100,000 people. Pays nearly 40% of all individual income taxes. It's an astounding number. There was a warning made years ago.
1 minute.
That if the country ever comes to a point where less than 50% of the people are paying the vast majority of taxes, the electorate that represents more than 50% can literally enslave those folks to pay for all of those benefits. We're going to talk more about this on Wednesday. This is Jason Bible, Right Path Real Estate.
Right Path Real Estate Radio.
Mike's off.
Jason and Tom at rightpathrealestate.com.
Well, Nikki, I will see you on Wednesday.
All right, Mr. Bible, you have a good one.
All right, you too. Bye.
All right, bye.
Guys on Facebook, thanks for listening. Adios. See you guys. Tom will be on tomorrow, and I'll see you guys Wednesday.